We're talking the bonds, inflation, and everything in between. We had the market going on an absolute tear, but the real question is, can this continue and is it sustainable? We're going to be going over specifically what's happening with the Bank of Japan, Australia, and could this be leading right over into what's going to happen to America? And of course, we're going to get into those juicy charts. We need to get out of the option drops headquarters and into the charts. Let's get to it. Now look, before we get too crazy, we need to talk about the facts. If we look at what's happening with the Nasdaq, we've gone on a rip, we've gone on a turn, and we're going in a beautiful trajectory. I mean, obviously, we're only going up, but we're clearly in a wedge. And now what I want to do is, you see on social media and everything in between, everyone is bullish, right? Everyone right now is saying we got to go up, right? We have a 25 basis point hike coming. We have everything in between. It's all going as planned. Now, if you've been here on the channel, we've been covering the facts most of all. That's what we've been trying to focus on. And as we look at these facts, what does it tell us about inflation? Now, the first thing I want to talk about is specifically these bond buybacks, specifically from the Bank of Japan. Now, if you don't know, Bank of Japan has been notorious for having one of the best economies globally. And if we look at what's happening with inflation, they're down at their CPI is like 3%. They've openly said they were open to having more inflation. They would actually encourage it. It'd be healthy for them. However, they've kind of changed their tone in the past month and a half. Bank of Japan also never changes too much of the policy, specifically with their currency. Now, again, they've started doing some of these bond buybacks, and when over the past month and a half, they've done 3 of them. That's a lot. It's quite a bit. And we've seen them get more and more aggressive. This is very strange and leads to uncertainty in the market, which we all know is my favorite and most bearish thing on the economy, is when you're not certain of the outlook of certain aspects of different economies specifically. The economy hates uncertainty. It's the most bearish thing out there. Now, when we go a little bit further, we can see a little bit more. Bank of Japan, this is pretty bad, and there's not the best outlooks here, okay? Specifically, again, I use a lot of instances with Warren Buffett. Warren Buffett, the first thing he started buying when the COVID crash happened was what? It was Japanese bonds, because of certainty. Because if every inflation is going to get, if every market's going to hit with inflation, Japan typically does the best, and it was a good investment. Japanese bonds, we've seen they've been doing pretty good, and we've seen the market going up, and we've seen USD to JPY heading to the downside, which typically leads us to a risk on mentality. If you look at the market historically, USD JPY, when it drops, when the yen strengthens versus the dollar, typically it's a risk on aspect. It's one of the key indicators on the market. These guys have seen a very interesting point of view in the market. We saw their inflation start to decline, but we saw their inflation be one of the first to spike once again. What's happening there? If you've been following on Twitter, their employment rate has not increased at this speed in, I believe, ever. This is the fastest increase of employment through a G7 series. It's important to realize that's happening. It's on Twitter. Recommend looking at that. We'll go into that here in a second. Also, Australia, their CPI took a very quick spike back to the upside. Also extremely concerning. What is happening here? It's all the same notions and things we need to be concerned about here in the United States. And I don't mean to be the guy screaming, I'm bearish from the rooftops. However, all I ask is that we play hypotheticals, play devil's advocate, and think about what if on the market. What if it's not good, that the only area of inflation that's really dropping is energy? What happens if said energy rises because what's China doing? What's Russia's doing? And everything in between? Would that not cause all other areas of inflation to spike once again like they did back last June through last March? Think about what really could happen and what's at stake at this point in time. That's all I ask. Now, when we dive deeper, we can see more of the issue. Australia, their unemployment still is not rising, similar to what is happening here in America. This is my overall fundamental viewpoint of the market right now. Let's dive into the charts. Okay, now I did a live here on the channel a little bit earlier, and we talked what was happening here. We talked about, and this is a 4-hour chart, so you can get a little bit more information. Future trading in America was not open, let me clarify, but futures were open for basically London's open. They closed, they'll probably reopen during Asia's open, which is around 2-3 hours from now. And what we're seeing so far is a little bit of a push down. So we saw a little bit of a push up this morning on that BOJ buyback, which typically gets us going. Why? Because when they're doing the bond buyback, the yen does well. And then what happens when the yen does well? It's a risk on environment, theoretically and typically. Okay, we need to understand that. all things can be invalidated, like the DXY dropping right now isn't necessarily the most bullish aspect. But before we get any further, I have to ask you to consider doing two things: liking and subscribing. Here on the channel, I am making videos every single day, so you are prepared. And I'm trying to make the content 1% better every single day. I'm trying to give you the best news aspects on the market, fundamentally and technically. I don't just use one without the other. I also don't use random indicators that don't matter, like the MACD on the 5-minute, because that's stupid and irrelevant. We want to use supply and demand and volume, because for me, that is all that matters. We want to know who is buying, where they're buying, and how they are doing it. And that's what we look at here on the channel. Obviously can't do too much of that today because the market wasn't open, but let's get back. Consider liking and subscribing. Also, too, the Twitter link is down below. Look, if you want to get updates throughout the day, you want to get charts, you want to get breaking news, I'm your guy. Let's get back to the video. So when we're looking here, let's talk about what's happening. We're making a little bit lower highs on the day so far. Now, again, I don't take this stuff too seriously when we're not necessarily moving with our markets open. Pre-market, after hours, I watch them. I think we have to. But I don't take it so seriously as of recently. Why? Because we've seen crazy pre-market moves. And I think that's the most important thing to realize, is that we may open strong and then drop very quick. So I think it's very important to see what's happening with the US markets at open and then go from there. But as we look, what's happening? Again, above 11.49, our only resistance was around 11.6 and then going to 11.7. I honestly, even though I'm a bear, I was very bullish once we broke above 11.5. I thought it would almost be instantaneous, our trip to 11.75. And why? As we zoom out just a little bit, you can see, we can actually get rid of that last 4-hour supply here. We have very little liquidity. We're going to go to something like the 4-hour really quick and just show you what happened. And I kind of went into detail in the last video, but you can see every time that we come in this range, what happens? We can see we dropped below 11.75 and then boom, came really quick to 11.4, 11.5. Quickly came right back up. The liquidity level just wasn't that big here. Not a lot of resistance, a lot of turbulence. All that resistance was at 11.5. We see quickly back and forth, back and forth. Even when we dropped through it, it was very quick, very liquid. So that makes me wonder, are bulls, are they really that strong? What's really taking place here? That has to be the question when we're looking here at the market. So we clearly have an ascending wedge. I don't know how else to put it, how else to make it look worse or better. It is what it is. We go to ES, very similar chart. I would argue it looks worse. You did break above local, supply at this range on the 4-hour. Our target here though, from bullish CPI, we would have expected bulls to take us quickly to 4,100. From CPI, how much further have we really gotten? When we zoom in here, I think it's apparent. Not far at all. We got a very slight break above. At CPI day highs, what did we get to? 41.15. Highs we got to 41.24. Yikes. 10 points from CPI. Real bullish. This is what I'm saying though. If we look back at previous bullish statements, bullish outlooks, what's been the census? We've had great runs up, great volatility. Buyers have shown up until proven wrong. In my opinion, since CPI, I don't know if anyone's shown up, buyers or sellers, but we have seen sellers establish swing positions. We've seen Morgan Stanley start to re-leverage their position. This is very important that we're looking at this, my point of view. When we look at bank earnings, and a lot of people are talking about bank earnings were great, Tyler. What did bank earnings tell us? They may have beat the 4 revisions that they had. So Bank of America comes out, oh, we beat on EPS, beat on revenue. But why are we not talking about what happened in between that? Why are we not talking about them revising down and down and down and down? It's ridiculous. Would you not agree? I'm just saying, look at the facts. Look at the important things in the writing on the wall. Why are Morgan Stanley, JP Morgan expecting more downside? Maybe there's something in the water we're not looking at. Again, I'm not saying to go short. I'm not saying to hammer the sell button. It's not what I'm saying. What I'm saying is to question general logic and what you're seeing on social media and seeing on the news. I ask you to play devil's advocate and ask yourself, what if it's not bullish? And why is it really bullish? Where is the room for upside? Why are they not showing up right now? Could I miss the entire run if I don't buy now? Based on previous cases, I would argue not. You have plenty of buying opportunities and it's never on the pump. That's my 2 cents here. Now I'm going to end the video really quick and just getting to the point here on VIX. Again, a lot of this I covered yesterday. I do want to say that right now. Going into this, we covered a lot of this yesterday. We look here on the 4-hour chart here, specifically on VIX. Very interesting behavior. We've made basically 51-week lows. If we come down below 17.5, I believe, we will make 52-week lows. I have to ask myself the question here. Is this it? Is VIX done? Are we going to break the trend? If we look here on the past year, when we come to this range, it's been the buying opportunity. What do we always say here? We want to reduce risk and maximize reward. If we look at the risk reward here, I think it's clear. The reward opportunity is to the upside, not really to the downside. That's my perspective and what I'm looking at, okay? Do what you got to do. That's what I'm looking at. So right now, what am I doing? I got Q puts for myself for March. I'm averaging into those puts. That is how I'm playing the market right now. Day trade perspective, we had really good volatility on Nvidia, Microsoft, Apple, Tesla. Those had great movement. So I believe the intraday trading is there as well. But when you're taking shorter time frame trades, I don't believe you have the opportunity to hold. I don't believe the value in holding some of these long-term trades or longs on short-term trades is there. I think the risk is huge. Now, worst case scenario here, we just trend sideways again. Stay in the range until the end of the earnings season. We know earnings season is upon us. Thursday, we have Netflix earnings. Where could we go from there? That's the real question also. If demand's getting hit so bad, is it going to hurt this earnings statement? And if this earnings statement gets hit across the board, it's foreseeable you'd expect the next year to be turbulent for most companies. So we have to ask the question, if earnings come out bad, is it good news? Is that going to be a catalyst to the upside? And then we also have to ask ourselves, is it a catalyst to the upside if they come out good? Because spending has gone up. What about consumer credit? Savings rates, all at the worst levels in history. So if you get anything on this video today, ask yourself to question what media is telling you. And I ask you to question, is what's happening really good for the market? See you tomorrow.